Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Monday morning and the cues coming out of global markets are not all that encouraging given the fact that we saw, a flare-up in tensions in the Middle East when, Hamas conducted a, surprise attack on Israel, and then, of course, Israel has retaliated as well. This morning Dow futures have tumbled over 200 points. In fact, crude has once again surged over 4% after stabilizing to $84 per barrel mark. It has come back to $88 per barrel mark. And of course, Asian markets, witnessing a sea of red. GIFT Nifty also hinting at a negative start. So lots of cues to digest, and don't forget we will be entering the earnings season this week with IT heavyweights like TCS and Infosys reporting their numbers this week as well. So lots of cues to digest. Over the next 30 minutes we'll be talking about all the cues, all the stocks to watch out for, and of course we'll also be taking up all your stock related queries. So if you have any queries, send them in to us on our YouTube feed and we will try and take them up. But before we go any further, let's take a look at the top headlines at this hour. Wall Street ended higher on Friday, but Dow futures slumped 200 points as war breaks out between Israel and Hamas. Asian markets 2-inch lower, while the GIFT Nifty is indicating a negative start for the Indian market. The Hamas-Israel war causes 4% surge in oil prices. Brent hits $88 a barrel, but analysts see no immediate threat to supplies. However, they remain watchful of whether or not the conflict will spread to the rest of the region. Among stocks in focus today, the Abu Dhabi Investment Authority will infuse nearly 5,000 crore rupees in Reliance Retail for a 0.59% stake. IT giant in TCS will be considering a buyback along with its results on Wednesday, while MCX can finally shift to its new platform after SEBI withdraws its abeyance order. The GST Council cedes the right to tax extra neutral alcohol to the states. GST on molasses gets slashed to 5% from 28%, while the Council also decides to not levy any GST on millet flour containing at least 70% millet composition. However, a 5% GST will be levied on branded millet products. And India kickstarts its World Cup campaign with an emphatic 6-wicket victory over Australia. In fact, half centuries from Virat Kohli and KL Rahul powered India's chase of 200 runs after the home team lost 3 wickets with just 2 runs on the board. Well, that was some bit of good news coming in, given the fact that India has kick-started its World Cup campaign with a great victory over Australia. But, let's shift focus to what's happening in the global markets. Joining me right now is Manisha Gupta. Manisha, we've seen crude prices surge back to 4%, to $88 per barrel mark, given the fact that, there have been escalated tensions in the Middle East. But what are you picking up? Do you think this rise in crude prices is sustainable, or do you think it's just a one-off and, sentimental hit on crude prices?
Well, as of now, it's a sentiment hit clearly, because we do understand that Israel only has 2 oil refineries with a capacity of a total 300,000 barrels per day, which is not so much. And Palestine produces no oil, refines no oil as well. So as per se, on ground, there is no impact on crude supplies. If the concerns escalate, there are more geopolitical tensions, there are reports of Iran being involved in planning these attacks. If it spreads to more regions, more territories, and to those players who actually produce crude oil, then we will see a reaction. This is purely sentiment right now, and the markets are concerned about supplies going forward. So as of now, on ground, there is no change on fundamentals, where we are looking at clearly weaker demand. The U.S. gasoline stocks are the highest since 2022. Russia also has allowed fuel exports via ports. So we are looking at supplies coming into the market and demand being weak. So that is what led to crude oil prices falling by 8% in the previous week. So this jump is clearly sentiment. Markets will want to watch out for more details, more data before you see any more price gains from here. Also remember, today the U.S. markets are shut for Columbus Day. So you wouldn't perhaps see that movement also come into the evening. So we are dealing only with the Asian markets right now, and the European markets and the US markets are not going to open. It's a long weekend there. So it really is going to be quite contained in that sense. Whatever news we get to see today in the day, tomorrow is going to be yet another day.
All right. That's the view then. Sentimental impact on crude, and we'll have to watch out for, how this crisis really plays out going forward. With that, Manisha, thanks a lot for taking out time and joining in this morning. But let me also bring on board a technical expert for today. Now joining me is Rajesh Pia of IFL Securities. Good morning, Mr. Palviya. Great to have you on the show. Well, Rajesh will be joining us in just a bit. I'm saying he's, taking a bit of there's a bit of a technical glitch there, but we'll get back to Rajesh in a bit. But let me also bring on board Kunal Shah, who's the research head at, Carnelian Capital, joining in this morning. Good morning, Kunal. Great to have you on the show. Let me first begin about, your thoughts on where the markets are headed. Of course, given the kind of, news flow that's coming in from the Middle East, looks like there may be a bit of a risk off going forward. But, the fact that we have stayed resilient in the face of FIS sell-off and, of course, what's been happening with the global markets as well, do you think any dip will be a buying opportunity hereafter?
I think there is going to be volatility, as you rightly said, because of all the geopolitical tensions out there. But what is going to be important for India is going to be the result season that is going to start from next week, right? So that is something which is going to be important. But so far, yes, in the long term, nothing changes. So yes, any dip if we get and any stock specific opportunity if it is there, it's going to be for sure in buying opportunity from medium to long term point of view.
All right, so then shift focus to the earnings season now. Of course, IT heavyweights reporting their earnings this week. But, overall, what are your expectations this time? Because, Q1 was fairly in line, except for the big disappointment from the IT space. This quarter, would you expect any sparks? And if yes, which sector would you be watching out for more keenly?
Well, don't believe to be any sparks in this quarterly numbers as well, but more or less believe that numbers will be very much in line with the expectations and there should not be much disappointment on the numbers front across various sectors. So that should kind of set the tone going ahead for the next financial year and the next 2 quarters remaining ahead. So basically, it should be in line and not any disappointments from any sectoral point of view is basically the take out there.
All right, and let's talk about IT in particular, given the fact that, 3 heavyweights, TCS, Infosys and HCL Tech will be reporting their numbers this week. Of course, TCS will also be considering a share buyback. Apparently this is something that the street was already anticipating. But, this morning we have a report coming in from Morgan Stanley. They have an equal weight target price at 3,730. And, of course, they've maintained that, this buyback was something that was being expected from the last 2 quarters. And, the brokerage also says that it does not assure outperformance in the stock, even though, the report has also talked about valuations. It says that the valuations are fairly, at a premium when it compares to the 5-year average. But, what will you be really watching out for from TCS this time around? Because deal wins, at least in the AI space, have been fairly strong, even though discretionary spends have slowed down. So what is it that you'll be watching out for, from TCS when it comes to the management commentary?
Yeah, I think obviously the deal wins have started to come back as not only reflected in TCS announcing big deal wins, but also a few other large IT companies announcing deal wins in the last few months, right? So along with the CC terms revenue growth, what they report, what would be important is the TCV growth that they report would be a key monitorable. But I think the margins pressure behind which IT was facing for quite some time, and deal wins that have been reported in the last few months now, and IT spends no more being discretionary spend, I think there should be optimistic outlook coming from large cap IT companies. Also, mid-cap IT companies so far have been very robust, and they are all near their 52 weeks high, and they have been reporting robust growth. So it's time for large-cap IT companies to kind of start, joining them.
All right. I also want to get your thoughts on what you are expecting from the FMCG space, given the kind of updates that have trickled in from the likes of Dabur and Marico. They have hinted at single-digit, expansion. But what would you be looking out for when it comes to some of these FMCG names? Volume pain likely to continue?
I think rural is something which has not been picking up for the FMCG companies, right? So I think there is some set of muteness which is out there when it comes to FMCG companies, largely on the rural side. So I think that is something which is going to continue for a little longer. and we'll have to wait and watch out how the rural side of the economy kind of picks up, which is basically going to help all of these large FMCG companies. So our take would be here to watch out the rural space, how that kind of pickles up going ahead for the FMCG companies.
Right. And what are your thoughts on the new age tech firms? We recently had, quarterly update from Nykaa hints at, good numbers this time around. Do you think the worst is behind for some of these new age tech firms? Of course, Zomato has already, turned, has come back into the black last quarter. Do you think these companies will build on from here?
Well, so far we have stayed away from all of this new age tech companies largely because of the valuations and also the cash flows not been there for all of these companies. So while some of these companies are doing good post the fall that is out there, but still, it would be too early to say, how to look at these companies in the medium to short term view. So that would be our take. So far we have avoided them because of the valuations and the cash flow that these companies have been generated. Not to say that these companies are probably not going to do good in the medium term to long term.
Right. And lastly, do you think the best is behind us when it comes to the margin growth for some of these banks? As deposits get repriced, we've seen an increase in operating expenses as well. So what are your thoughts when it comes to the banking pack?
I think all the banks so far which have reported the loan growth, right, be it large cap banks or mid-sized banks, the loan growth has been pretty much robust. Term deposit growth has also started to catch up, and CASA is something which is very slow, which is quite obvious in a rising interest rate scenario. Everybody would want to shift their money from CASA towards term deposits. So I think in a quarter or so, right, this interest rate pressure which is there on the liability side should kind of catch up, and we should see the pre-provisioning operating profit growth in lines with the loan growth. Not to say that the operating expenses are not going to be growing because everybody is kind of in an expansion mode, but still the PPOP growth probably one quarter down the line should be in lines with the loan growth, and NIM pressure should kind of settle down in a quarter or so. In fact, in some of the mid-tier banks, the way the asset side have been repriced, I think this quarter should start seeing NIMs normalizing for some of those banks as well.
All right, expect NIMs to normalize for some of these banks. With that, Kunal, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us.
Pleasure. Thank you.
Well, with that, let's also shift focus to market technicals now. Joining me is Rajesh Pia of AAS Securities. Good morning, Rajesh. Great to have you on the show. Of course, negative news coming in, when it comes to the global cues, Asian markets, trending lower. You have Dow futures, of course, reacting to what is happening in the Middle East. In fact, what is happening with Israel and Palestine. But would you say that, if there is, some bit of weakness kicking in today's session, would you look at it as a buying opportunity? And secondly, what are the levels you'll be watching out for on the Nifty Bank Index today?
Good morning, Nandita. So due to negative global cues, yes, we are going to have a negative opening. But again, if you look at the overall setup, last week we have seen that some short covering action was there in Nifty as well as in the Bank Nifty, and Nifty comfortably hold about 19,600 level for the weekly closing basis. If at all, if we gets any dip towards 19,550, 19,500 zone, that is again, important support area on the downside for near-term setup. If at all Nifty manages to hold above 19,500 level on a closing basis, then I think there would be again, buying interest will come in the market, and we may see again pullback action from those levels. So if we get dips around 19,550, one can look to buy with a stop loss of 19,500. And on the higher side, as we have already in the last week, 19,650 was the close. But again, if at all Nifty crosses above 19,700, then there would be another round of short covering we can see in the market, and possibly Nifty can inch up further higher to 19,800 also. Previous week, we have seen broad-based rally was there. Most of the large cap, mid cap, small cap have performed. And we have seen that, market breadth has improved significantly in the last week. So that is showing that, buying interest is coming back to the street. And if at all, if we get a dip around 120 point, that should be used as a buying opportunity in the market. For Bank Nifty, definitely we are now trading above 44,000 level. So 44,000 is the important level to watch for in the gap down opening. If at all Bank Nifty manages to hold 44,000 level, then again we may see some support buying action to initiate around those level, and then Bank Nifty may also try to show some pullback action. On the higher side, the major short covering action for Bank Nifty will trigger above 44,500, 44,600. If we crosses those level, then this rally can extend. So 44,600 is the higher side resistance for the day, and on the downside, 44,000 is the important key support area in the decline.
All right, that's about the Nifty Bank, of course, 44,000 key level to watch out for there. But let's also talk about the stock of the day, Rajesh. Titan came out with its quarterly business update, 19% growth in jewelry division. In fact, overall revenue growth of 20% on a YY basis. Watches and wearables business has grown in excess of 30%. So, looks like it is poised for a very strong quarter this time around. And if you look at the share price, it is just 45 rupees odd, shy of its 52-week highs as well. So, what are the resistance levels you'll be watching out for on this stock, at least in today's session?
So Titan is looking positive. In the previous week also, we have seen a very strong buying action, and stock almost now trading near to its previous swing high level. If at all stock crosses above 3350 mark, then possibly this rally can extend towards 3400, 3420 level in the continuation of this pullback which we are seeing since last couple of trading sessions. Overall structure is looking bullish. Long-term setup is bullish. Buy on dip should be your strategy. For trading point of view, your stop loss now should be at around 3260 and upside target 3255, and then for 3400 in the near term basis.
All right, those are the levels to watch out for on Titan. But let me also, first ask you about MCX. Saw a great sort of up move. Then, of course, there was, SEBI's abeyance order, with respect to its shift to the new tech platform. And then we saw the stock come under a fair bit of pressure. But Friday, again, it clocked in a 5% rally. And there is, of course, news flow that, SEBI has finally allowed or given its nod to shift to the new tech platform. Do you think this stock is now poised for a breakout on the charts from here?
So Nandita, already breakout is already registered by the stock in last week itself. And looking at the overall setup, yes, the stock is poised for giving a good up move from the current level. 2150, 2200 is the immediate target where we are expecting for MCX to deliver in the short period of time. Overall structure is bullish. Stock has formed a rounding bottom sort of formation on the monthly chart, and it's a multi-month breakout is taking place on the MCX chart. So yes, this stock may continue furthermore upside in the positional basis also. So one should remain invested in the stock. Your stop loss should be at around 1960 and upside target 2150, 2200 in the short term. But on a positional basis, I think if stocks continues to hold about 2000 mark, then possibly next positional target can be seen towards 2400 to 2500 also.
All right, 2400 to 2500, that's those are the levels to watch out for on MCX. But let me take up some viewer queries now, quite a few trickling in this morning. The first one is coming in from Karthikeyan, and he's holding IFL Securities shares, 140 shares at the rate of 73 rupees per share. And he wants to know whether he should hold on for a time horizon of 2 years or should he exit. Now, share prices have, been on an up move. In fact, over the last 1 month, IFL Securities is up somewhere around 16%. 88 rupees is where it's at the current juncture. He's making profits. Would you advise him to, at least book out partially, or would you advise him to hold on to it?
So Nandita, we have seen a significant buying action in all platform companies which are catering to broking businesses. So IFL Securities also in the line with the same momentum we have seen in last couple of months. Looking at the momentum, yes, we can see a level of around 95 or 200 in the short period of time. But again, it's very difficult to give a view for 2 year perspective. But if you are looking for short-term point of view, 100, 105 could be the possible target in the near-term basis, where you can again review the stock behavior. At this juncture, I would suggest to keep your stop loss at around 82 rupees to hold your long position.
All right, that's the view on IFL Securities. Hope that answers your query. But there's a query coming in from Prabhu, who wants to know the long-term view on South Indian Bank. This stock has, in fact, in the last 6 months, it's up somewhere around 75% or thereabouts. More upside from here, Rajesh, South Indian Bank?
Yeah, stock is looking positive, and across all time frame, stock is showing strength. Looking at the monthly chart also, we expect that this stock is going to continue its rounding bottom sort of formation on the monthly chart, and possibly 34 is the next target for the stock on a positional basis. So if you are holding for short term investment point of view, then hold your long position. Keep your stop loss now towards 22 rupees. Upside target is 30 and 34.
All right, watch out for targets of 30 to 34 on South Indian Bank. But let's take up a query on Lemon Tree. This one is coming in from Nitin Limai. Wants to know your thoughts. Of course, all of these hotel stocks are in focus given the fact that, most of them will be riding the World Cup wave. Room rates have, of course, surged and hit the roof. So at least, the coming quarter is expected to be pretty healthy for some of these hotel and aviation stocks as well. But particularly for Lemon Tree, how is it looking on the charts?
Yeah, definitely. So most of the hospitality related stocks are moving up, and the theme is playing out quite well. Most of the stocks have done well in last couple of week, and the Lemon Tree is also looking promising. Looking at the setup, the stock is forming higher top, higher bottom formation on the near term, short term setup. So overall structure is looking bullish. Stock is almost now moving towards to its previous swing high, that is at around 125. If at all stock crosses above 125 mark, then this rally can extend towards 140, 145 also. So you can hold your long position with stop loss of 118 and 114, and I think stock may manage to give breakout above 125, and then we can see a target of 130, 35 in the short period of time.
All right, watch out for targets of 135 on Lemon Tree. But we have a query coming in from Vedanta from Satvika Ranganathan. Wants to know your thoughts. Now this stock, on a YTD basis, of course, for a better part of the year, it has been under pressure. But then there was a demerger news, post which it saw a bit of an uptick. But on the charts, how is it looking now? Do you think it is coming off from all the pessimism and perhaps looking to stage a turnaround for the rest of the year?
So there is an underperformance in the Vedanta throughout the year. Stock was in consolidation only. Even if we look at the longer term setup, stock is still in consolidation for since last 3-4 year. Broader range is 165, on the higher side 350. So this is a broader range for last 3-4 year for the stock. Now the focus has shifted to the demerger of the businesses. So I think price hangover is going to remain in the stock prices, how this corporate action is going to unfold. So on the higher side, if we discuss on the technical front, 240-45 are the key challenging level on the higher side. Until the stock not crosses above those level, we may see some more consolidation is going to remain in the stock prices. On the downside, 205 is the key support area. If at all stocks breaks those level, then we may see further more pressure on the stock price towards 190, 185 also. So I think looking at the near-term, short-term setup, 205 to 245 are the level where stock may remain in this range for some more couple of weeks. Either side breakout will decide the major direction for the Vedanta.
All right, watch out for the levels that Rajesh mentioned. Of course, 205 to 245 is the range to watch out for on Vedanta. But, there's a query coming in from Deepak on Tata Tele Services, in fact, Tata Tele Maharashtra. Stock has been sideways over the last 1 month or so. How is it, can you really spot a direction when it comes to this particular stock now on the charts?
So I think, yes, there is a sideways behavior for the stock. And I think looking at the near-term, short-term setup, the immediate supply zone for the stock is at around 105. If at all stock crosses above those levels, then this may continue furthermore upside towards 120 also. So I think those who are holding the position, they can now keep their stop loss at 92 rupees to hold their long position. Above 105, this stock can also show some rally towards 120.25.
All right. Rajesh, I also want to get in your thoughts on a Godrej Industries. Now, this stock, I think, rallied over nearly 20% on Friday. And of course, there are reports of a demerger announcement when it comes to the Godrej Group as well. So how should one play this stock now?
So very strong price action in the last trading session, and stock managed to give breakout of its surrounding bottom formation on the daily chart. This breakout is clearly indicating now if stocks continues to hold above 670, 675 mark, then possibly next target we can see towards 800, 830 in the continuation of this uptrend. So buy on dips is the strategy. 875 should be your stop loss to hold the position. I think the breakout is clearly indicating with the volume action is that, we may see another round of buying interest in the stock, and 800 to 820 could be the possible target in the near term to short term basis.
Right. Another stock that has been fairly sideways is AAS Finances. And we have a query coming in from Tarun Singh on this particular stock. How would you advise investors to play the stock? If somebody wants to enter into the stock, would you say this is the right time, or would you say wait for further dips to buy into this stock?
So after underperformance, now stock is showing some recovery trend. Stock is moving in upsloping trend channel on the weekly chart. Looking at the near-term, short-term behavior, yes, we can see some more upside in the stock in the near term. But again, it will take time to regain its earlier glory. So I think 1800, 1840 are the key resistance area on the higher side. If at all stock crosses above 1840 mark on a monthly, weekly closing basis, then we may see furthermore, buying interest, and then this stock can give good upward momentum from those levels. So for near-term trading perspective, 1840 is the level where one can book some partial profit. On the downside, 1670 is the key support area for near-term trend. If stocks holds this level, then possibly 1840 target we can see in the coming weeks.
All right, that's the view on AAS Financiers. But I think with that, we've come to the end of this query segment for today. But Rajesh, what will you be flagging off for our viewers this morning in terms of stock recommendations?
So I think, Nandita, one should focus on the real estate space. Most of the real estate space stocks are, doing good. DLF is on our radar. Though we are going to have a negative opening, but still we would advise to buy here DLF to buy. Overall structure is looking bullish. We are projecting target of 565, 570 for trading perspective. Your stop losses should be at around 535. Another stock is Mahindra Holiday Resort. That stock managed to give breakout on the previous week of falling trend line with the volume. So that breakout is clearly indicating that, now we can see MHRIL can continue furthermore upside momentum towards 465, 480 in the short period of time. One can buy this stock with stop loss of 415. And the third stock that we are recommending here, that is Titan. We have already discussed, and looking at the overall setup, we expect that Titan can continue furthermore upside. 3400, 3450 is the near-term to short-term target for Titan. One can buy with stop loss of 3260.
All right, those are the 3 stock recommendations coming in from Rajesh this morning. With that, Rajesh, thanks a lot for taking our time and sharing your thoughts with us, and of course, addressing all our viewer queries as well. But with that, we've come to the end of this edition of Morning Trade. Of course, we are bracing for a negative start, but experts do say that any dips would present a buying opportunity in these markets, given the fact that we have shown resilience vis-a-vis the global peers. But with that, thanks a lot for tuning in, and of course from me and the entire team, wish you a very happy trading day. But don't go anywhere, because coming up next is Opening Bell.